Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and US economy space. And as you guys can tell from today's title, we will be covering everything that's going on with that Jerome Powell meeting. If you guys enjoyed today's content, go ahead and drop a like below and subscribe. That way you can stay up to date with all of my most recent content. But let's go ahead and jump into the CBBI so we can see what confidence we're starting out with. And you guys can see we are still hovering in that 15, 16, 17 range with that recent news that came out. So it doesn't look like it shocked us too much to the downside, but we are butting our heads up, are betting our butts up against that support right now, so we will see what happens. And if we jump over to CoinMarketCap, you can see here that we did fall below that $1 billion or $1 trillion market cap, so we will be covering that because there was a key support that we wanted to stay above, as well as Bitcoin dominance is still hovering around that 42-43% range, and it's still on its way up to 50% like we think it might hit. Now, looking at the top 10, you can see here Binance USD at the bottom still hasn't officially fallen out with its token burn going on. But we do have the crypto space falling roughly around 2% on the day. But let's go ahead and jump to the first story. And as you can see here, Jerome Powell said some silly stuff. The man said that if the United States releases a digital dollar, it will send Bitcoin to zero. And this is one of the main points I want to make to y'all is, do you really think they know what they're talking about in the crypto space? Now, I know they know what crypto is, but clearly they don't know anything about Bitcoin if they think it will go to zero if the big almighty United States releases their own digital dollar. So, Wednesday, over possible impact of that CBDC, Federal Reserve Jerome Powell pondered potential the tokenize of that US dollar would wipe out digital assets. The Fed has been exploring the concept of issuing the digital dollar for a couple, 6-7 years now, dating back to 2016. CBDCs are pretty similar to the digital token that is called a stablecoin. So, pretty much a stablecoin is a token that is tied to the US dollar, and it's not regulated by the Federal Reserve or the Treasury. It's ran by private firms on a decentralized network, while a CBDC would be managed by the actual government. So you could see why the government wants a CBDC while people are okay with just the regular old stablecoin. So why is CBDCs in the talks right now? Well, stablecoins kind of have been the focus of recent events because you have Tether facing penalties for making false statements about what's actually backing their token, and then you have what's going on with Paxos, who is preparing for a potential lawsuit from the SEC over their Binance branded stablecoin, which they are currently burning. And there was also talks about the Terra coin that collapsed, where this wasn't even backed by anything. It was just ran on an an algorithmic stablecoin that was ran just by code. So there wasn't actually any assets that backed it. It was just trust it works. So 11 countries are currently using a CBDC, while 90 are piloting and developing it. So I'll go ahead and link this website in the description below, but it is a very useful one to track it. I kind of follow up. It has key stories and spotlights, but you can just see which countries have actually gone ahead and already launched it. So you have Nigeria, you have a lot of countries in the Bahamas and Caribbean. So it's definitely cool to just see the growth, and this is why I think the United States will get left behind, because we are still in research, while you can see here about 61 other nations are already testing it and piloting it and developing it while we're still researching it. And it is important to highlight that because Powell said the Fed hasn't even determined if we need the CBDC as an innovation. They don't think it's possibly needed at all because our dollar is so strong. Now, I personally don't agree with that. This just also shows that the United States is okay getting left behind in the fight for crypto innovation. So, I thought that was important to highlight for y'all, but I'm going to go ahead and jump over to the next story, and that is about the Fed hinting that we are going to see an actual 50 basis point hike after all of the talk of only a 25 hike. So they also didn't just talk about the stable coins, CBDCs. They talked about the possible FOMC meeting that is coming up. And as you can see here, it is important to pay attention to that because interest rates combat the high inflation by essentially sucking money out. So this does boost the profitability of fixed interest, debt interest, or income instruments. And when it comes to risk assets like real estate, stock market, cryptocurrencies, commodities, it essentially has a negative effect. So you can see here we still have 13 days until the next meeting, so there still can be some job data, some CPI data that comes out that might change it, but if you guys remember, it was about a 90% chance we would see this at a 25 hike. Well, after the conversations today, we've completely switched to 78%. So let me go ahead and see if I can get this pulled up for y'all, because in one of my last videos, we do talk about and pull up the CME gap, or the CME group's prediction, but I'll go ahead and just post that on Twitter. So if you guys want to go ahead and follow me, the link to my Twitter is in the description below, and I'll go ahead and post a photo on what this chart showed about 2 weeks ago. But we will be paying a close attention and be covering the CPI data for y'all. So just another reason to go ahead and subscribe below, because we'll drop a video kind of covering what is actually coming from that data, not really just the plain numbers that you see. So lastly, I want to go ahead and cover one more story before we jump into some of the charts, and it is just that the crypto-focused bank Silvergate is shutting down their operations and liquidating some of their assets. So this could be a reason why we are still seeing a little bit of the market bleed. Silvergate is one of the main banks for crypto companies, along with Signature Bank, who actually has 114 billion compared to just Silvergate's 11. But this is still some of the contagion coming from the FTX collapse. You can see here that Silvergate's major customer was FTX, so you could see why they took a big hit once FTX did collapse. So liquidation comes less than a week after Silvergate discontinues its payment platform known as Silvergate Exchange Network, which was considered to be one of its core offerings. So with this liquidation coming, it does mean that they are selling some of their cryptocurrency holdings. So that is why you can continue to see a possibly bleed as they are liquidating all of those assets. So I don't think this will send us to a new all-time low by any means, but this could potentially set us up for another leg down as the bears start to get some of their momentum going. So you can see here that the company disclosed that the delay filing was partially due to an immediate regulatory crackdown, including into a probe underway by the Department of Justice. So even more examples that the United States is laying their foot down on this crypto innovation, crypto technology, anything you want to say above. So crypto companies like Coinbase and Galaxy Digital raced to cut ties with Silvergate this last week, as y'all saw with all of those stories, which ultimately now we are finding out why, because they're cutting their banking division. They are just liquidating all of their assets. So essentially, Coinbase and Galaxy Digital switched over to that other New York bank, which is Signature Bank. So let's go ahead and jump into the charts because there's just a couple of things I want to show y'all. As you can see here, the true total market cap, because it does differ, as you can see here, from about $40 billion due to coin market cap using some of those, I don't want to call them trash coins or shit coins as some would say, but just, some of those coins that lack utility, lack solid market caps. So we did break below that 1 trillion, and as you notice, there is a potential head and shoulders forming, which could ultimately send us back down to this support level of 860 billion. Now, it would be important to note which cryptocurrencies that total market cap would be falling from, because this is money leaving the space. So would it be people taking some profits from that recent run up? Is it people just exiting the space like Silvergate? So I think it would be important to pay attention to this, as well as if you jump over to Bitcoin, we are bouncing our head right on that, our butt right on that support that we did draw for y'all a couple of weeks ago. If we do break down below this, I would be careful and avoid trying to catch a falling knife, because we could potentially fall all the way down to 1900, maybe even wick to 18.2. But if y'all remember from yesterday's video, I did have this line drawn right here, and we did break below that range in this channel that we were focusing on. So you could potentially expect to see some more moves down in this near future. I am still bullish on the long term. I still do think we found the bottom in over here, but I think this correction is healthy, and it was coming as always, just kind of as we figured. But like I mentioned, you can see here Bitcoin dominance is still just kind of staying where it is, and it looks like a bull flag is forming, so we could potentially see a lot of that money move out of those stable coins and into Bitcoin. So this could potentially have a target of around 48%, which would get us closer to that 50% that I want. And as you can see here, it does look like a lot of people are taking profits out of these alts that have just been running, because we've seen a nice change in stablecoin dominance. So if we do just go into some of these AI tokens, you can see here they ran up, we don't want a trend line. They ran up 400%. Fetch did about the same thing of 900%, so not the same thing. Kopi, one of my favorite gaming tokens for this next bull run since the start. That's not the start of the year. Since the start of the year is up 200%. So this is healthy. This is expected. It's what we want to see. We don't want to see it go straight up with no volume below us, so there's nothing there to catch our drop. But that's all I wanted to highlight for y'all today. If you guys have any questions, please drop them in the comments, because I would love to answer them or start a conversation. If you enjoyed today's video, go ahead and drop a like below. That way I know to continue making these videos. But I hope everyone enjoyed, and stay safe out there. Bye-bye.